The yuan as a reserve. China has long been pushing for a greater role internationally for the people's currency, and this looks closer than ever with the IMF holding the key. Louis, the IMF is currently debating whether to endorse the redback as a reserve currency alongside the dollar, euro, yen and sterling. What's the for and against?
It's still hard for most investors to invest in China. And if you want to be a reserve currency, you need convertibility of your currency and you need open capital accounts. It needs to be easier for companies to keep working capital in that currency. It needs to be easier for central banks to own that currency. And of course, for money managers to invest in that. The for is very simple. China is now the #1 exporter in the world. It is the #1, or at worst, the #2 trade partner for pretty much every economically important economy in the world. China is increasingly exporting more and more capital and helping seed large infrastructure spendings all across the region, Pakistan and Kazakhstan and India and elsewhere. When you put it all together, the renminbi's importance, at least around Asia, is growing extremely rapidly. Now, the very important development of the past 6 months is that China is rapidly opening up its capital controls, which means that the against is going to be running short on arguments.
So becoming a constituent in the IMF's drawing rights basket, what would this really mean for China?
The bigger question is, what will it mean for foreign investors? For foreign investors, it'll mean that all of a sudden, if you're a foreign central bank, you basically get the imprimatur of the IMF telling you, look, you can go out and buy these bonds and we'll basically, if it goes badly, it's on us, it's not on you. So the first thing this should lead to is much lower interest rates in China.
You have likened the move to Japan's currency liberalization in the 1980s and the subsequent run-up in the yen assets. Can you explain this for me, please?
Japan liberalized the yen in 1980. Around the same time, Japan joined the world MSCI, the MSCI EFA index, the global bond indices. And so if you were an international equity or bond investor, all of a sudden you had no choice but to buy Japan. And for the following 10 years, foreign investors were basically left chasing their tail, trying to make up whatever weight in the benchmark Japan had, and always struggling. And by the end of the 80s, of course, Japan was 45% of the world MSCI, and 7 out of the top 10 companies in the world by market cap were Japanese companies. Fast forward to today, and the biggest anomaly out there, the biggest anomaly in our global financial infrastructure, is that China is absent of any global bond index, and is a tiny proportion of the global equity index, somewhere between 0 and 2.5%. Now, the reality is China is 14% of global GDP. Equity market is the second largest equity market in the world, providing about 16% of daily global equity volumes. And so, logically, China should be anywhere from 8 to 10% at least of any global equity benchmark. It is no longer a question of if, but when the renminbi becomes freely convertible. On the day that happens, all the index providers will have to massively reweight China in the benchmarks. And on that day, who will be the marginal seller of Chinese stocks, Chinese bonds, to make room for all the foreigners needing to buy China to keep pace with their index? The story of Japan shows that there are no marginal sellers. And when there are no marginal sellers, then the markets can just go up in a vacuum.
So following the IMF's 2010 assessment, what does China need to do to meet the criteria for inclusion?
It is becoming easier and easier for foreigners to invest in Chinese fixed income, foreigners to invest in Chinese equities. And a lot of the things that the IMF was asking for back in 2010, China has either already achieved or will likely achieve between now and November.
The IMF board will hold a vote in October on the yuan's position, but there will also be an informal board meeting at some point in June or July. What do you expect to be discussed, and do you think China will come out favorably?
Is the IMF won't want to be, let's call it Asia Development Bank. If you look at the past 5 years, China's been knocking on the door of the Asia Development Bank saying, look, we're the biggest economy in Asia. You've got to make room for us around this table. The Asia Development Bank, which was pretty much managed and controlled by the Japanese and the Americans, kept pushing China away. Up to the point where China said, you know what, I've had enough of this, I'm going to create my own. And so 3 months ago, China launched the Asia Infrastructure Investment Bank. Now, the US lobbied extremely aggressively for its allies not to join the Chinese Asia Infrastructure Investment Bank. But the UK did, Saudi Arabia did, Germany and France did, South Korea did, Australia did, pretty much every US ally did except for Japan. So much so that today, if you're working at the Asia Development Bank, you're a has-been. Now, all the game will be with the Asia Infrastructure Investment Bank, since the Asia Infrastructure Investment Bank will have much more capital than the Asian Development Bank. Now, one of the big challenges at the IMF is for the past few years, the IMF has been trying to get more money out of the US to replenish its budgets, but the money keeps getting stuck in Congress because the US Congress does not want to fund the IMF. And so if tomorrow China funds a new IMF, a competing IMF, while the IMF itself has no money, it's not hard to imagine what will happen. The IMF will become irrelevant, just like the Asian Development Bank risks becoming irrelevant.
Now, Louis, the US do not seem keen for the IMF to include the RMB. Why is this?
Well, look, it's a competing currency, right? The US dollar has been the #1 currency by a long shot in Asia to finance Asian trade, to finance Asian capital spending, to finance Asian private banks. Basically, for decades, any transaction of any size in Asia took place in US dollars. Now, this gave great power to the US financial industry, who provided those dollars and made money out of that. And it provided also great power to the US, period. It is having the world's reserve currency is a tremendous, tremendous advantage. It's, as de Gaulle used to call it, it's the exorbitant privilege.
The yuan is already being used more in global trade, even without being a reserve currency. How would you say the currency has developed?
I think when people look at China, they forget that China has a deep, massive comparative advantage that no other emerging market ever had. And that is that China has a deep, liquid financial center that people trust in the shape of Hong Kong. And in that regard, China was very lucky. Having a financial center that people can trust takes 50, 60, 80, 100 years. You need lawyers, accountants, judges, auditors, bankers, brokers. You can't build that kind of soft infrastructure overnight. China was lucky in that the Brits built it for them. And the Brits are pretty good at building financial centers. And then China inherited it. And China, for the past 5-6 years, has been using Hong Kong to promote RMB trade and to create an offshore bond market. And this is why the use of the RMB has been able to grow so rapidly. It's mostly because a lot of it has been able to come through Hong Kong. Again, a deep liquid financial center that people trust.
And if China doesn't make the grade this year, will the country have to wait the usual 5 years for review, or could it come sooner?
If they miss it, it'll be not by very much. And I'm not sure the IMF will want to run the risk of China creating its own competing IMF. I think instead the IMF will say, look, come again in a year's time. We'll work on the US Treasury. We'll get them on board. And in a year's time, we'll get this done.